Welcome to the masterclass in practical training for US taxation. My name is Aparna and I'm joined today by Abhishek and Robert. We are excited to guide you through the process of filing your tax forms using some of the most reliable software options available today. In the world of tax preparation, there are several popular tools like TurboTax, UltraTax, H&R Block, and ProConnect. However, in this session, we have chosen to focus on Drake software. We believe Drake stands out for its ease of use, making it an excellent choice for both seasoned tax professionals and those who are newer to the field. This is how the session will go. First, we will start by reviewing the work papers given by the client. They are crucial for gathering and organizing necessary information before inputting them into the software. Next, we will guide you through entering the details into the relevant sections in Drake, ensuring accuracy and efficiency at every step. Finally, we will look at the output, your completed tax forms, and show you how to review and finalize them before submission. By the end of the sessions, you will have a clear understanding of how to effectively handle your tax filings. We will equip you with practical knowledge you need to navigate the tax season with confidence. So, before you go any further in this video, pause and download the trial version of the Drake software. Now that you have downloaded the Drake software, let us continue today's session. Today, we are here to help you navigate the Form 1120S. Form 1120S is the US state income tax return for S corporations that is used to report income, gains, losses, credits, deductions, and other information pertaining to businesses that are registered as S corporation to the IRS. S corporation is a pass-through entity and the income is taxed in the hands of the shareholders. Now, this is how your today's session is going to go. First, we will diligently review the work papers. Then we will input all the pertaining information into the Drake software. After that, we will see that the output is ready to be filed with IRS, and then we will review the form. Now, on the screen, you can see the work papers given by our client, Sunny Fields Inc. The first page is the client information. We go through that quickly and we come down to the next page, which is shareholders information. And then the third is Sunnyfields Inc. profit loss account. And the depreciation tax detail for the same client. And then we have the balance sheet of 22 and 23. The first thing we have to do is to open the Drake software and create our login IDs. It's a good practice to keep the work papers on one side of the screen and start creating the return. Assuming that a client has come to us for the first time, we open and create the return. We give the EIN number. System does not have it in the memory, so it asks you to create a new return. It is a S Corp 1120S and the corporation name is keyed in here. Then the basic details of the corporation are keyed in the field in general information. However, before we go into that, I would like to discuss a few seconds about the top band information that is available for us to key in. First is the general information. Then we have the shareholders, basis and information. Then we have any information on assets, sales and recapture. Then we have other credits that the corporation can claim. Then other forms. If there's any foreign income we have to disclose here. And miscellaneous is usually used for election options and states, if you have to elect any states. So going back to general information, we start with the first demographic details of the corporation, name and address. The phone number, if we have got. When did this corporation take an election as a S corporation? The date is 3rd Jan 1998. And what is the method of accounting? And what is the business activity code? Usually business activity code can be also brought down from the drop-down menu. And what is that business all about? Date of incorporation. Is it a first year of S corporation? It is not. So we don't fill out G or we don't fill out H. We don't fill out on the right side where it is not a calendar year or other information. The last column is in case we need this client information if we were to doing the e-filing of the return. The number of shareholders during the year will be picked up by the system when we go and key in the shareholder information. So this concludes the S Corporation's general information form. Now we move on to shareholders information. There are 4 shareholders in this S Corporation with the different ownership percentages, ownership number of shares. So we'll be keying in one by one the information. This shareholder is our contact shareholder given by the client. So we will also use his information for signature information. So we can give the item D, which says stock ownership information. It's required for shareholders. CEO has got 96 shares. We go to the next shareholder and the similar information is keyed in. The only difference is he's not going to sign the return for us. So we key in the number of shares at the start of the year. Since we are filing for this client for the first time, we have to give all these details, the name, address, and number of shares. From next year, it will be in the memory and it will take over. We come to the last shareholder. After we are done with the shareholder information, we have to fill a Schedule B other information form. Schedule B is designed to capture important information like the corporate structure, shareholders' details, and specific financial arrangements. We must give all the details of any interest in foreign ownership exceeding 20% or any material advisor disclosure statement, details of any Section 163J business interest expense, or if the corporation has got assets less than 2,50,000, receipts less than 2,50,000, any debt cancellation, any contract payments of 1099. In this case, they have got contract payments and their assets are less than 2,50,000. So this form is a very important form, and though for this client, all the answers are no, as you can see on the screen, it's important to review with the client specific questions and take the right answers before you mark yes or no in the screen. After the Schedule B, we have got few elections to be made. We will go to miscellaneous and go for election options. The client can go for safe harbor elections, de minimis and safe harbor elections. So there are two elections that he will take up. You also have to inform that there are no K2s and K3 for this return. We have to specifically say K2 and K3 are not required. So the form generates a statement. Now going back to work papers, we are now left with profit loss account and the balance sheet, the actual business income and expenses. And this will be handled by my friend, Mr. Robert. Robert, over to you.
Thank you, Aparna. So now from here, what I'm going to cover is the P&L of Sunny Fields, who is in farm operations. We're going to put in some depreciable assets. We're going to move on to the balance sheet and show how to reproduce the company's book balance sheet, show how to put in distributions to the shareholders. Then we're going to review the Schedule L, the M1 and the M2 to make sure they're accurate. And finally, I'm going to show you how to quickly review the return and then print the return or e-file it if need be. Okay, so Sunny Fields is a farm operation, so we're going to go to the farm income and expense sheet, which is a Schedule F. Okay, here we have a few different sources of income. So we're going to double click into the income screen. And enter these payment amounts. For certain types of payments, like agricultural payments and the patronage refund, we have specified lines for these. As you see, we also have interest and dividend income. This income is not entered directly on the Schedule F. To input this, it goes to the Schedule K, and it is entered directly onto this form. Now we'll go back to the P&L and enter the expenses. These are all common expenses to a farm operation. We're going to skip the depreciation expense because we will put in the assets, and this will automatically go in as an expense to the Schedule F. And I'll show you how to do that. Okay, we're going to identify this as an activity that is a trade or business. This allows the company to get a QBI deduction of 20%. Okay, so now we want to go to the 4562 to put in our assets. At the top, we are going to link these assets to the Schedule F. So that is where the depreciation expense will appear. The land is not depreciable, but we want to track it in case it's ever sold. Our second asset is tilling, which is common with farms. We're putting in prior 179 expenses that were elected and taken in prior years. The third one is additions to our building. Again, we have 179 expenses from prior years and prior depreciation. And finally, our last item. Okay. Now, what I always like to do with depreciation, okay, is after I enter those items, I want to go to that schedule and make sure the appropriate amount of depreciation is flowing to the tax return. And when we look at our P&L, we see that it should be $3,436 on the Schedule F for depreciation. Okay, we look at the 4562, there it is, $3,436. Okay, from here we're going to go and we're going to enter information off the balance sheet, off of our book balance sheet, so that it matches on the tax return. You'll see at the top left, okay, if a company has less than 250,000 in gross receipts, they do not necessarily have to file a Schedule L, M1, M2, but that's how you would force print it if you need it. This company has over that much in gross revenue, so it will automatically print. We're putting in the cash. This is from 2022. We want to put in the beginning year information from 2023, which would be December 31st, 2022. We're using this balance sheet. We put in the cash, we put in the depreciable assets and accumulated depreciation, and now we just went to other assets and we put in the stock. Okay. From here, we're going to go down. Okay, we're going to enter our liabilities. Okay. We have a liability to Mid-America and then a loan to Theo. We put in the beginning amounts for the year. We go down, we put in the capital account amount and then the retained earnings from the start of the year. Okay. Okay, we're going to go to the Schedule M and put in the retained earnings amount from the beginning of the year. Okay, now we're going to go to the 2023 balance sheet as of December 31st. Okay, we'll start at the top, end of year. We put in the cash amounts. Land value, accumulated depreciation, and then the end of the year stock amount. Okay, down to the liabilities and equity, put in our end of the year liability amount. Okay. Now at this point, all we have to do is fill in the capital account amount. Okay, the retained earnings will be adjusted based on the distribution amount we're about to put in and the net income amount that will roll through, and I'll show you. So for distributions, we want to escape out of here, okay, go to the distribution screen. Okay. If we don't know the exact date, here we're going to, we'll put in 12/31 of 2023, and we want to put in the 192,000 distribution amount. And what this is going to do is based on each shareholder's ownership, it's going to distribute that $192,000 onto their K1 based on that percentage. Okay, so now we're going to go to the tax return and look over the Schedule L, M1, and M2. Okay, we go to page 4 first. Okay, we want to match these amounts, make sure they match what we have on the books here. And as you see, the 2022 assets and liabilities match. Okay, we're going to scroll down. Okay, and the 2023 assets and liabilities match. Okay, and then we go to the page 5. There's our net income. Okay, if we had any adjustments, reductions, or additions, those would go below it. Okay, and then here is our M2, which is retained earnings. As you see, there's the start, the balance at the beginning of the year. We added the 352,000 in ordinary income plus the 7,224 in dividends and interest. Okay, then we subtracted the distributions to the shareholder, and that's what the retained earnings should be. Okay, so we're good. Now that we're here on this screen, um, an another way to do a quick review is to go to the comparison. Now in these case, if we had prior year data, because we had done tax returns in those years, they would be in 2021, 2022, and we could look through the columns and see if there are any big changes or large differences. Okay, but this is the first year for this client, so this is a way to just scan and look and make sure your numbers match. So at the top is the income. Okay, then we go to the expenses. We know our expenses and income is right because our net income is accurate. Then we scroll down. Okay, everything looks good. So we're going to move on, and I'm going to show you how to print. Okay, so to print, you go up to the Sets tab. Okay, at the top will be your e-file forms. Okay, this is what you'd print if the client needs to sign an 8879 or other type of e-file form. Okay, the next section is for clients. Okay, this has cover sheets, letters, uh, privacy policies, bills, things that you might want to include with your returns, plus the client's copy of the tax return. Okay, the third section is preparers. Okay, sometimes these will have forecasts, overflows that aren't necessarily included with the client's copies. Okay, and then below that is the federal. Okay, this is the actual tax return that's going to get filed with the IRS. Below that is the K1 section, and these are the copies you print out, the K1 packages you print out for each client, each shareholder, and give them to put on their personal tax returns. And then below that is the state. If there is a state, that would be the tax return filed with the state. And in this case, it's the state of Indiana. Okay, so that concludes our video on how to prepare an 1120S. Have a great day.